Hey everyone, it's Wednesday. I'm all fired up today. What can I say? Gold and silver. Holy smokes. Just on a tear. There's good reason for it. It's looking good. And listen, it's I forget how few people have even remote interest in gold or silver, or mining for that matter. We're in it, and chances are, if you are online watching this, you probably know who I am or what we talk about. Um, we focus in on this opportunity, not only from the battery kind of energy transition side, but fiscally as well. This flight to safety that we've seen throughout history, where we go through periods of extreme stress and societal change or war, depressions, you name it, and there's a flight to commodities. It's certainly precious metals, and always have been. And this time around, it also includes Bitcoin for those that so choose. Otherwise, this run would be significantly higher, because the younger generation will be looking to, once again, the safe, the foundation, the solid, and that is gold. And listen, not only just the actual bullion. So when we talk just the price, like the commodity, and we encourage people that should be a conversation with their broker or advisor, to look at that, even to replace cash, because at the end of the day, whatever you're pricing assets to, your house, land, your car, whatever, Bitcoin, all of that goes back to US dollar right now, which is bigger, this bigger theme that we're talking about in regards to debt, the debt that's been accumulated, particularly in the West, the decoupling to some extent, the breakdown of the globalist narrative to a certain extent, the rising up of the BRICS. All these things are true; they're real stories. And then depending on who you are, playing probabilities where you think that these things may land. Before we get into talking about some like the top 3 gold companies, top 3 producers, which we'll get to, I want to just throw out a quick kind of shout out to Microsoft with their deal with Constellation to invest in reopening 3 Mile Island. That's huge. That's excellent news. And everyone will remember last year, a huge run on uranium, and it's pulled back a little bit. You know what? Uranium is still the story. It's not changing. There's so much opportunity in that space that we talk about separately from this kind of gold and precious metals narrative. But I want to throw that out there because it's worth looking at if you're not looking at it already. I wanted to also just talk on briefly. We had mentioned the BC Conservative Party, their platform for mining. They came out very, very vocal about it. And oddly enough, the NDP has put out, I think it was just a day ago, that quote unquote, the Premier, David Elby, said Northwest BC has the critical minerals that are in high demand worldwide, giving us huge advantage in the global movement to clean economy. Our plan will get mining projects moving that grow BC's economy, create good jobs across the Northwest, and benefit communities directly. There are currently 16 new or expanded critical mineral mines proposed in BC, and will fast track priority projects to grow the economy and create jobs. And he said that they're giving $250 million to a government NGO, Resource Benefit Alliance, for infrastructure. They're going to give a bunch of money to other government programs. Now, I'm going to be critical on this one because they've been in power for a while, and they're loosely encouraged by mining, but really they're not. It's not. If you live in BC, you don't get pitched about mining unless it's someone like me. The government is not promoting itself as being mining. They're terrified to do it. They're just, I would say, they're just kind of putting it out there. And also, where they're saying that they're going to put money, they're saying we're going to get a whole bunch of other government-funded programs will fund to make work projects. Now, they did also say that they're going to create, as one of these, a critical minerals office, which will support First Nations engagement and reduce federal government. So, true to form, they're just going to create much more government agencies to talk about social and governance. Whereas it should be that, no, there is less discussion required on these things. If there is this global transition, if there is a climate crisis and it's needing these critical metals, then the narrative should be we're going to streamline permitting. We're going to get these metals in the ground. these amazing resources. And in that process, because we're Canadian and we've had a long partnership in treating people well, and I don't mean, oh, we'll go back in history 100 years. I mean, in the last decades, it's been very, very good, that it's going to make a lot of people wealthy in those communities, those whatever tribal lands they're on or leasing from. These people aren't not consulted. This kind of meme from the left that these groups don't make out well. They make out just fine, and they should. If you're on their land, you should be dealing with them with respect and properly to work out a good deal. And that does happen. And this old kind of story of kind of pillaging and raping the land, these types of ideas, or you see in movies, that is not any conversation that I've had with any CEO of any mining company. They all, and it's not lip service, they all love the environment. They want to do the right thing. They want to do the energy transition, and they want to be partners with the people that are currently there. And they don't want to pollute like water. They don't want any of that. So I think there has to be a re-education for most of the population to think, do you really believe that all these people working, say, at an oil and gas company, the tens and tens of thousands and hundreds of thousands across the world, all the engineers and scientists, or those involved in mining, that they really just want to hurt the environment? Of course not. They don't. And especially if they're here in BC, they love it. They love hiking. They like going out. They love where we live. So we need to get that overall theme, kind of changed in people's minds to help get this really going. And not only just on the battery metal front, and I'll leave the political part along, except for one other thing, but to get people motivated to see that them as individuals can prosper, not only by being part of the solution, but also investing the money into part of the solution. And we are, of course, extremely biased on that. I make no bones about it. And my goal for everyone would be to encourage them to go talk to their plan or their financial advisor, whoever it happens to be, to talk to them about having gold and silver in whatever form, ETF, silver bullion, whatever. Or if they are really interested as well in the producers, we'll go through those top three. You could do the research on those, or you just go to Sprott. I mean, we don't have relationships with any of them. Sprott has an ETF, and we want people to be involved in some way or shape or form. We like certain specific companies that we work with and we love to talk about that have long-term upside. And we have a model for that. But in general, I would just want everyone, if it was just $100 to reach in and go, hey, listen, maybe I'll throw it into the Sprott Gold ETF or the Uranium ETF or the Juniors, their ETF. That's a way that you can be a part of this and have an upside in this big movement towards gold and dealing with the chaos that's ensuing. And also, kind of come together, understanding that we're a resource country, resource rich, and we have a ton of opportunity. Now, I want to pull up a bit of a graph, not a bit of a graph, and a graph from it's the Congress Budgetary Office. It was from JP Morgan, and it's this will give you a bit of context regarding investment banks and why they're not as concerned about debt or deficit. And if you look here at this chart here, hold on, we're just pulling it up. It goes back to 1940s, and you can see that, I mean, massive. I mean, World War II, of course, the deficit was blown out of the water. And then you see here in 2020, massive stimulus. And, a lot of fluctuation between net interest outlays, so paying out the interest in the past, and then your basic deficit. The theory here is that Congress has told the investment banks going into 2050 that they expect to be in deficit, that they're doing this, the trillions of dollars that they're pushing into a green agenda, and they've accepted that to some degree. And their narrative is that the U.S. dollar is still the U.S. dollar, and just as I prior mentioned, everything gets changed back to U.S. dollar. Whether even your Bitcoin, you're quoting it in U.S. dollar. And even your gold, you're quoting in US dollar. But you can transfer those assets and get whatever other currency that you want. But that narrative also is true on the flip side, is that the entire debt load right now is so shockingly big, not just the deficit. Like running a deficit from the government is one thing. You pull in, say, $5 trillion in taxes, but you're paying out $6 trillion in deficit in spending. You're far out spending. That's just one portion, the deficit portion. The overall debt is so huge. This comes back to the narrative that we talked about even 5-6 years ago of like the CBDC, new like the Fed coin, or the fourth industrial revolution, the great turning, or whatever, the great reset, all these things that sooner or later that has to be resolved. I don't know if it's tomorrow. I don't know if it's in 6 months. I don't know if it's in 20 years. Could the US government, in theory, just keep printing, paying off? Yeah, they could. It seems insane to think they could, but they could. But also, some of these big investments, some of these huge investments that will likely, I don't think it's too hard to imagine, will pay off. A lot of this infrastructure towards nuclear power and building that out, all these chip plants and building that out. If AI takes off and starts having efficiencies, there's a lot of growth that can come, and that could certainly play on the positive side of that story of maybe paying down some debt. But the problem is here with what's coming up here, and with the changing of the guard. I can't say what's happening here in October and November, but everyone knows what I'm talking about. Whether side of the government is in, there's zero benefit or zero interest for them to cut spending. Why would you? The damage is already done. And if it would be, we need to spend more. And we're kind of seeing that with rates coming down. We're getting knowledge that they're going to cut more, which is great for gold and silver. It's great to hear. And are we going into another quantitative easing cycle? Can they, and if they have already convinced investment banks that this is not a problem, they can float this. And they are still the hegemony, and they still have power over, the dollar being the de facto currency. Then yeah, they can continue to roll on and just print money, have the Fed print for them to pay the interest payments off. This can be done. It sounds ridiculous, and anyone on our side of the table that looks at alternative, kind of economics and news, it's a head scratcher, and you think this can't go on. But if you are a big fan of modern monetary theory, you kind of do think that you could just print money and pay for things and just continue on and on and on and play it forward. Your thoughts on that? I'd love to hear them. I think I know what they are, but it's good to know what the flip side argument is. So if the general narrative from an investment bank is that they're not terribly concerned, there's a good reason for it. Now, that being said, a lot of them had no idea what was going to happen in 2008. So although they have some of the best and brightest and everything else, they eat their own narrative and believe it just as much as anybody else. And that's why it's so critical today to get sources of information from all types out there, all sorts out there. And for any of those young ones out there who loves, Bitcoin and crypto and all that, you want to be listening to some of the old fellas. And I don't consider myself in there, although I technically am. But I mean people who have been in the market for a very long time and they've seen these cycles, because just like history, it never repeats, but it often rhymes. And they have so much wisdom to teach you, and they can see these kind of things happen. And we're hearing them. They're telling us things look very good for miners, for certainly gold and silver. And even though right now it's out of favor, the battery metals, that's not going to change. It doesn't matter who takes power. If there is a change in power at all in Canada or the US, they are strong proponents of critical metals. That story is completely on both sides agreed upon. It's how that will play out. Will it be more an opportunity for the capital markets to make it happen, or will it be a government-run program? And if you're like me, you want the capital markets to do anything. All technology comes from there. Innovation comes from there. It's from merit and from really, giving someone an upside to be able to create something amazing. If you leave it to government, generally speaking, things don't turn out terribly well. But listen, if they're handing out money, we'll gladly take it. I'm not going to ramble on as long as I usually do, but not for any other reason other than there's lots going on right now, and we're very excited. We're going to have on Peter Kraut next week, Wednesday at 10. He did a great presentation at the Metals Investor Forum, and there's lots of great speakers there. We're going to talk about silver. I mean, he was on just not too long ago, and it's done exceptionally well. He and Chris Marcus are really, and of course, David Morgan are silver guys. I mean, they know everything about silver in and out. So we're going to have him on, and certainly take a peek too at any of the Andy Schechtman videos that have been coming out lately as well. He's always doing interviews. I'm going to try to get him as well. But holy smokes, the angle and the take he has is fantastic. We're happy to share some of those links as well. And of course, one other person, David Jensen. Incredible takes on all of that. We'll put the links in. We're going to try to get them on here and ask them a ton of questions. Feel free to send me questions that you want me to ask these guys as well, because getting their insight, once again, they've been in the markets for a long time, and they are just deep into the data on this. And we want to pick their brains, and they're happy to share information. So let's try to get them on here. But let's just take a look at the 3 top mining companies just to date as far as returns. So we're just going to look at the top 3. So Career Mining, 146.59%. Now, give or take, whatever it happens to be right today. Everybody knows the name New Gold. New Gold up 136.79%. And Harmony Gold, South Africa's largest gold mining companies, up 131.89%. This is pretty good for mining companies. Now, if you put that into context with the top 3 producers, we've got like Newmont, number 1. They have about 6.9 million tons projected for 2024. Barrick, about 3.9 to 4.3. And in third place, Agnico Eagle. They're about 3.35 to 3.55 million tons. There's plenty of interviews right now that you can watch from Beaver Creek that they've done, I think, on Kitco and whatnot. Very, very exciting. There's lots happening, and they've had exceptional returns as well. There's no doubt. So if you're in, say, that junior mining index, that ETF of Sprott, you will be happy. If you are out picking some of these gold producers, you're probably very happy, and you're likely to be happy moving forward. I know at one point, and hopefully I don't get this wrong, it might be off a little bit, but I think Barrick had said at one point their all-in sustaining cost was like $1,400, where gold's at $2,600. So that's incredible. That's amazing. That's what you want to hear. And we're seeing in the past year a lot of these M&As that either trying to happen or putting together. We're likely going to see a heck of a lot more, and we're going to see, I think, some interesting takes here with them being flush of cash to see what's the strategy. Building out a brand new deposit is challenging because although inflation is down now, like the rate of everything, costing a lot. The huge inflation that we've had, like, we're not ever going down to cheaper prices. Like I always remind people, like, we've had the massive inflation, the huge bubble that put up prices up here. That's not coming back down. It's just the rate of that increase is slowing down now. That gets carried on to everything: construction, build out of materials. And we know we have a lot of logistic issues around the world as well. So the cost of a brand new mine is a little bit more challenging. But if there are companies that have like old existing mines that just need refurbishment, or maybe just need to get out of care and maintenance, that have some good ounces in there, well, they might be starting to look attractive. So it's going to be interesting to see what's being looked at, picked and poked at. And of course, some of the exploration companies that are hitting big numbers, wonderful, fantastic. What we look for is any of these juniors. We tend to want to see and like to see who are the billionaire miners in it. Are they doing JVs already and being supported that way? Because that's a big step for a junior. To get a partner is huge. And I'm not going to mention them. You can reach out to me who they are. If you got a deal with Rio Tinto or Anglo Ashanti or any of these types of companies, or of course the big names in mining, that's a big factor. That's a big nod. It's very challenging to raise money, and if you're able to attract those types of people, and I mean in a significant way, not just 300,000, 400,000. If they've come in and they have serious interest, it's no guarantee, but it's certainly a very good sign. And that's part of our model, is that you look to see who's involved, where's the smart money, what level are they involved in? Is it just kind of, hey, I'm showing some interest, we're supporting you? or if it's no, we've got a big budget, we've got a big 5-year plan, and we're looking to be partners and build a relationship. That's a great thing and doesn't happen terribly often. And there are lots of companies out there that have that and look fantastic. And this could be it. There's lots of people that think that this could be the big start to a real big run. And if that's the case, the biggest question always is okay, we've seen the producers. When does it start flourishing into the juniors? When does the money start flowing around into the other mining companies as well? And that could be soon. So we want to keep talking about it. We want to get people excited. And more than anything, regardless if you like the projects we're in or not, we want to get you involved, because if there's a chance now finally where we're going to see this thing take off, it's asymmetric. It's huge. And it's something that you should talk to your advisor about. You should look at. And to sum it all up, because we talked about it last week, and I just did a presentation in Richmond on Saturday at the NAI 500. It was a great event. And I was talking about modern portfolio theory. It was a bit challenging because we had to translate as well. So it may have been a bit of a tough topic to go in with, having to translate as well. But the reason why I brought up how one does a regression analysis and looks at modern portfolio theory is that we wanted to ensure with people that as part of your entire strategy, when you're looking at, say, mining in general, never mind the junior miner, the more speculative, that you have to plot out that risk and what risk you're willing to take. And 90% of your funds should be in something long-term that's stable and safe, that meets your risk tolerance. So once again, if you're into equities, it should be funds and ETFs. Like, you could just go buy an S&P 500 ETF, throw 60% of your money in it, put something into a bond ETF, go to bed, and that's going to be a good strategy. Low fees, and you'll get market returns, and you'll do quite well. Those that are wanting dynamic and excitement, they like the narrative, they want to follow this, and they want to be a part of, say, the energy transition. They want to get really into it. They want to put a little bit of time and effort into the market. That speculative portion of their portfolio should be a lot smaller, of course, 5 or 10%, maybe less. It all depends, once again, on who you are, how you are, what kind of appetite you have. Even that is maybe that 5 or 10% is what goes into the ETF it's brought, because you don't want to be picking stocks by yourself. But if you like, and you really want to get involved, the biggest asymmetric gains, of course, are picking one company, following it through, believing in the management, the project, and seeing if they're hitting milestones. That's going to be your biggest upside. But not everyone has enough time to do that. So we like to help people along that process, talk about the ones that we see and keep them up to speed. But if nothing else, wherever you fit in there, we talk about that speculative side, that really high venture cap side, because it is expensive. It's that, exciting. It is that highest risk to reward application. And that should be, really kind of nailed home, is that is asymmetric. You set yourself up understanding the risks, but that the upside potential is dramatically higher, and you're comfortable with that risk. And we wanted to kind of go over that with people at the conference. And here again, because it's important to understand within your portfolio where you should be, because we see too often that people get excited about a story, they go in and they go all in very quickly. And if you've been unfortunate enough to maybe hit and do well the first time on that, and then you think that it's going to be a run, that can also be your downfall, because it can be addictive. Is that you should always be building into positions, whatever it happens to be. And it takes a lot of due diligence in order to be in this space, especially this space, because it's R&D. A lot of it's R&D. Mining's not easy. And even though the overall narrative is strong and that we need these critical metals, you can see between permitting, between government, everything else, there's a lot of obstacles and challenges that have to be remedied, specifically in the West, if they want to even honestly talk about doing this transition. And on Friday, we're going to talk about the McKinsey Global Materials Report, where they talk about this as well. They are very well convinced as to the need of all these critical metals, where they're going to come from, how we're going to get them, And that narrative has not changed, regardless of the market, regardless of AI or anything else, which means that it's a long play, and it's just starting now. And that means there's a running room for us for decades if we do this right, especially in Canada, because we are untapped. I mean, we are a mining country, but not even remotely close to where we should be, and what we could be. We could be a powerhouse in this global energy transition if we have the right people in charge and the right people leading the way. And hopefully that's coming. Anyways, that's it for me today. We'll see you on Friday. We love all the comments. Let me know what you think. We cover a lot of different things here, and we love the feedback, whether you agree or totally disagree. That's part of the fun of this. And hopefully you've been kind of getting into this this precious metals part, at least, and seeing that this precious metals, or like one could argue this would be like the risk-free rate if you're doing like a capital asset pricing model. It's usually the treasury bill rate that you'd get, but one could argue that gold really is. That's your safest flight to capital. If it's up 24% for the year, what do you think inflation is for the past year? Anyways, I'll leave you that thought. We'll see you later, and enjoy your midweek.